In this video, we are looking at the Denver rental market for multifamily properties. So as we can see, we have the Denver metro statistical area outlined by CoStar. If we go into the filters, just like all the rest that we have done, we are excluding corporate, excluding military, senior, and vacation, and we are only including market and market affordable, so that we are taking a look at only conventional apartments in this data set. We can also go to location and see that we are in market metro statistical area for Denver, Colorado. So let's see what the analytics tell us. So here is our supply snapshot. We have 5,306 properties in this market, totaling 290,321 units. There are 25,985 units remaining under construction. There were 19,760 under construction the prior year. 4,798 have been absorbed over the last 12 months, so not bad, better than what we've seen in most markets. But it looks like there must be a slowing because we do have an increase from 6.5% a year ago in vacancy to 7.6% today. The market rent is $17.73, so still showing some slight rent growth. We'll see what that looks like on a year-over-year basis. Okay, and as we know, the capital market side, the cap rate and the price per unit, they are lagging, so we're not going to pay attention to that. We're just looking at the rental data right now. So let's come down and see what the long-term occupancy average looks like. So our long-term occupancy average is 92.92%, and we are sitting at 92.43. So we are below the long-term occupancy average. I guess we can argue that we're like right on that line. So it looks like Denver is teetering from being in the oversupply phase of the market cycle into the recession phase. So let's go look at the data and see what it tells us for all asset types, Class A, Class B, Class C. So here's our data analytic chart. Once again, we do not look at asking rents. We don't care what the owner or the property manager is asking for the rent. We want to know how much they are receiving for rent, and that is effective rent. So if we look at what the rent was in first quarter of 2022, it was $17.54. It went up to $18.17 and then down. So down to $17.92 and then down to $17.47. So for the last two straight quarters, we are seeing a downtrend in rents in the Denver metro statistical area. As a matter of fact, our fourth quarter rents are lower than the first quarter rents were in 2022. All right, let's see if we can see why that is. So if we look at our deliveries, it looks like we had some solid deliveries all the way through the year, 1643, 1953, 2007, and 2476 as the year went on. And they absorbed okay in the first and second quarter. As a matter of fact, they absorbed almost 100% of the units in the first quarter. They over-absorbed in the second quarter. So that means occupancy should have ticked up, and it did. It went up 0.3%, so occupancy went up from 93.5 to 93.8. But then the trend started slowing. So we delivered 2,007 units, only delivered 963. Then we delivered almost 2,500 units, and then we started hitting that bad trend. So it looks like that they have hit a wall at some point. Now, I don't know if a company left the market, and so renters left. I'm going to assume, since single family has slowed considerably, especially moving into the fourth quarter for this market, or really for all markets, that they didn't move into single family homes. So we may have hit our affordability apex at this point, and the Denver residents that are in the rental market have finally said, that's it, we can't do it, and they're going to start doubling and tripling up. So let's go look at each class A, Class B, Class C, and see what the data shows us for that. So here is the data for our Class A metro statistical area for Denver. We've got effective rent, which is what we will be looking at. And if we look over here, we can see that there are 392 total properties that are classified as Class A, totaling 98,929 units. In the first quarter, we were at 2068, went up to 2141, and then the downtrend started. And it looks like, once again, we have lower rents in the fourth quarter of 2022 than we did in the first quarter of 2022. And very, very small growth. So 2001 to 2036, there's your year over year, still showing positive growth. So once again, as I've mentioned before, be very careful what the brokers are showing you if you're investing in this market. You want to see the quarter over quarter data. So let's look at our deliveries. We can see that the deliveries are split between the Class A and Class Bs. So it delivered 685 in quarter one, and they absorbed more than 100%. It delivered 1160 in quarter two, and looks like it delivered about 75 to 80% of that. And as it should have, our occupancy increased during this time frame, okay, including third quarter. Third quarter still grew. So it's interesting that our rents declined in the third quarter, considering we absorbed all those units. So from 2141 to 2099, that's quite interesting because absorption was still pretty strong. We absorbed more than delivered in the second quarter. We absorbed more than delivered in the third quarter. Now, the fourth quarter, I understand why the rents went down, because we are definitely now showing signs of slowing. So we had 1,401 deliver and only 134 absorb. So it looks like our exit happened in the Class B, since we saw that negative. Could have been in the Class C as well, but you don't end up with deliveries in the Class C, and we'll see that when we get there. So, interesting tale that we grew rents in the third quarter, or that we shrunk rents in the third quarter, even though we absorbed more than we delivered, showing high demand. So that's a very interesting tale. A little bit of an anomaly there, okay? That's not what that should read, but we have seen anomalies before. Let's go see what the Class Bs tell us. All right, here are the Class B rents. Again, effective rent is what we're looking at. We have a total of 985 properties in the Class B market in the Denver metro statistical area, totaling 103,641 units. If we look at the effective rent in the first quarter of 2022, it was $17.29, went up to $18.02, and then that downtrend started. And we are right back in the fourth quarter of 2022 at where we started in the first quarter at $17.29. All right, so let's see what our deliveries, construction, and absorption shows us. So we can see that we delivered 958 in Q1, and we absorbed 472, so about half. That's a little bit different of a tale than we saw in the Class A. Delivered 793 in Q2, and over-delivered or over-absorbed those deliveries, so we've made up a little bit from the deliveries in Q1. But as we continue up and we have deliveries of 1,274 in the third quarter, we only have 425 units of absorption, so about a quarter. So this shows us why our rents are declining. Unlike in the A market, where we over-absorbed and we still had that decline in rent. So this does give us an indication that we should have declined in rents because our demand is diminishing, our supply is increasing. And then absorption supplied even more as 1,075 units were delivered in the fourth quarter. So that does give us an indication of our occupancy slowing down and decreasing, okay? So this tells a true story, unlike the A's did. So let's go see what the Class C market looks like. All right, so here is our Class A data. Once again, effective rent. There are 3,547 Class C properties in the Denver metro statistical area, totaling 86,491 units. Let's take a look at our rental data. So we started the year in first quarter of 2022 at 1310, went up to 1339, went up to 1343, and then started the downtrend. But the Class Cs, this is the first class that we've seen in this market that did not go equal or below the first quarter stat. So Class C did not start the downtrend until the fourth quarter. So let's see what the absorption tells us, because we should not have deliveries. Okay, so again, no deliveries. It's showing under construction, but as I've mentioned in the past, that CoStar may be indicating that this is in a lower income neighborhood and considering it a Class C because of the neighborhood or because of the submarket or trade area. CoStar does take into consideration both the location as well as the asset itself when it determines A, B, C. All right, so let's just keep that in mind. So these are probably going to be delivered as Bs, not as Cs, because you don't deliver a Class C property. But if we look at the absorption, tells us an interesting tale. So we did absorb some in the first and second quarter, and then we started exiting stage left. All right, so we've definitely hit that affordability. I don't like the fact that rents increased even though absorption decreased in the third quarter and occupancy decreased, so there was not a demand to increase rents. But I'm okay because it was only one quarter and now the rents are starting to decline down because that exodus is continuing, albeit small. 412 units on almost 100,000 properties or 100,000 units isn't a big number, but it is letting the ownership and the management know, look, we can't pay these rents anymore, so we're going to start doubling and tripling up. Or we're going to go buy single family homes. Or we got laid off, we're moving out of the market, we got relocated, whatever the case is. All right, but there's something that is causing the Class C market to leave. My guess is it's probably affordability. Okay. All right, so that does it for the Denver metro statistical area. These rent trends do confirm for me on the supply side for multifamily conventional properties only that I would put this market on the long-term occupancy average on the market cycle chart in between phase 3 oversupply and phase 4 recession. So it's starting to trend down that direction. So stay tuned on Monday, because today is Friday. I don't do them on Saturday and Sunday. On Monday, we will look at Salt Lake City, Utah. See you guys on Monday.